So the markets seem to be shrugging off the mortgage mess.
Is that a positive sign? And will declines in oil continue to fuel this rally? We have an all-star lineup to talk about it, including Michelle Girard of RBS Greenwich Capital, Fox contributor Phil Flynn of Aileron Trading, and our Bulls and Bears, Gary Kaltbaum, Pat Dorsey, Peter Schiff, Bob O'Brien. Is there anybody that we don't have? Let's see. Michelle, I guess your issues with the earpiece have been fixed. Is that correct? You
Yes,
can hear me all right?
I can.
Is this an oil rally? Is that what we've been seeing?
Well, there's a lot of good news with oil. There's no question that as oil prices come down, fears about the economic outlook fade. If this is real and it's sustained, we're going to see further declines in gasoline prices. That's going to take a lot of pressure off of the consumer, particularly as we look ahead, not even so much to the back-to-school shopping season, but that all-important Christmas shopping season. So it is good news, and I think that to some extent that's exactly what the market is reacting to.
Peter Schiff, is that pullback real in oil?
No, not at all. I mean, this is still a bull market in oil. It's still a bear market in stocks. What you're seeing is a lot of short covering in the stock markets, and people are taking off some of the trades where they were long energy, short the financials. So you're getting a bounce in the stock market. It's a bear market bounce. Sell into it. And the pullback in oil is not going to last. There's a rally in the dollar right now. That's not going to last. The fundamentals are awful for this market, and people are ignoring it right now, but they will be reminded of it shortly.
Well, fundamentals might be lousy, Phil Flynn, but it looks like this bear in the oil market is real.
Well, technically it is. Some people say 117 makes it an official bear market. But, the big question is, if things are so bad for the stock market, Peter, how can oil continue to rally when we continue to see this incredible demand destruction? That's a question I'd like to ask.
We're not seeing incredible demand destruction. I think we're going to see a lot of demand destruction in America for a lot of things, not just oil, but we're going to see demand creation every place else. And with a weak dollar, it's going to be the price of oil going up for Americans as it gets cheaper for a lot of other people.
But Bob O'Brien, the 300-point gain yesterday, we had Brenda Butner sitting in Peter's chair saying, I don't believe it. That was yesterday. Do the technicals, do the things that you look at indicate that it is real or that it is just a bear market bounce?
If nothing else, I think the technicals are suggesting that we may be establishing a pretty good base here. Now, that doesn't mean that we go to the moon from here. But if you look at the sentiment indicators, all the bullish bearish sentiment turned to, historic readings earlier this week at the end of last week. If you look at the trading volume yesterday, it was one of the first days we've seen where you had about 90% affirmative volume taking place here. So there was something under this. This wasn't one of those light trading days where the market just kind of ran away. But, Peter's case on the fundamentals, I think, is spot on. We're going to have to improve some of these fundamentals before the technicals are really going to matter much at all.
And Gary Kaltbaum, as long as the Fed is worried so much about growth that they're not raising interest rates, we do have the downward push in the dollar, meaning that inflation could get worse.
Well, look, I've got news for you. The dollar's starting to act better here, and it's right at some very important resistance level against all currencies. And if it can move above it, I think there's a shot here for better action. And look, for me, and this is all I've been saying every day, watch oil prices and watch the financial stocks. If the day the financial stocks decide to top out, that'll be it for the market because they have been leading both up and down. So far, they continue to have a bid, whether the fundamentals are bad or not. And Peter, you need to know the market is a discounter of the future, and you never know if things are going to start getting better in the next few months, and the market's starting to see it here. I'm still taking it day to day. I'm not totally convinced. I'm in a little, and I hope
Well, the market's been wrong before, and they'll be wrong again.
Pat Dorsey, are you watching financials or are you looking as a value guy at other things, and what are they?
Well, I think the important thing to realize is that, aside from, the energy financials that dominated the headlines this year, you take those two out of the S&P and corporate profits are up about 4% year to date. And in the forecast for next year, there was about 14% growth year over year. That seems a little high to me, especially when you've had this weakness in the consumer, you've had this weakness in financials, but the rest of the market has stayed fairly strong, even amidst slowing growth. And what that tells me is that, well, you typically, in an economic cycle, the rest of the market has to take some pain too. And so this may be a little bit more drawn out than this strong snapback in the financials would suggest.
So, Michelle, where do we hide for cover if we want to take advantage of what's happening with regard to the advantages of lower oil prices? but we don't want to get in financials. Where do we go?
Well, you know, if it's sustained, and I don't know, I'm not an expert on the oil market. I'm disappointed to hear that this may be a head fake, but if it's real, and I think that there is something, it looks like it's more than just a head fake this time, then clearly the retailers are going to do much better in the second half of the year than they've done, because again, fears about the consumer will fade. And I would just echo too, the performance of the dollar very quietly in here has strengthened, and we're at key levels there. You know, let's face it, Europe, so much of the growth areas overseas in the UK, some of their data have gotten really bad lately, and so while we're not getting better, but we're not getting a whole lot worse, and that situation seems to be weakening, and that's why the dollar is starting to look a little better.
I do want to make one point. Watch oil here 100 times a day. Just watch it every hour. There's been an hour-by-hour correlation between the price of oil coming down and consumer stocks going up. There is an absolute link.
Peter,
and if oil goes up, not good.
Gary, it makes a point that some of the retailers had started to perk up their ears, and we saw, say, for example, Polo Ralph Lauren today doing very well. That may just be an individual story, but you don't believe that the retailers...
No, the retailers are in trouble because their consumers are in trouble. They don't have any money anymore. They can't borrow. They have no more home equity. But, you know, the problems for the global economies, they're all related to the money that they loaned us that we can't pay back. These are short-term problems for the rest of the world, but they're structural problems for our economy. So I think there's a lot of opportunities. Foreign markets are pulling back, but their economies, I think, are going to do very well.
Yeah, but Phil, we can take advantage of that oil-wise, because if indeed it's true that there's a slowdown, we've got news that China is going to slow. We heard it was going to slow down after the Olympics. That means demand destruction as far as China goes, which was one of the big gobblers of oil. So that means even more downward pressure on the price of oil, right?
I would agree. You know, I would say mythbusters on this global economy, because there's been a myth that no matter what happened with the crisis here in the U.S., that the rest of the world is not going to be affected. That is a myth. It's being proven. We're going to see more slowing in Europe. We're going to see more slowing across the globe. And that's going to eventually make us look a little better. Not because we're better. It's because they're going to get worse.
But Bob O'Brien, you get this story today that Morgan Stanley is telling thousands of clients, hey, I know we said you got these home equity lines of credit, but we're shutting them down right now. It just makes you wonder if that will crimp consumer spending and how that'll sort of react as far as a domino.
Well, it already has crimped consumer spending, Liz. We've already seen the consumer retreating. That's why all these retailers, particularly at the more high end, the department stores, for example, are suffering so badly because people don't have access to capital under any circumstances. The thing that's fascinating to me, if you're talking about a recovery in retailing, why is MasterCard at a 4-month low?
Yeah. And, you know, of course, consumer spending, cutting back on consumer spending is a good thing. That's what we need. Consumers have spent too much money. That's why we're in this mess. Unfortunately, it's the government that's trying to interfere with the free market, that's trying to rein in all these excesses by trying to encourage more spending.
By the way, I know why MasterCard is low, because I've been getting about 20 emails a day from Peter Schiff telling me why it's low. But Matt Dorsey, what about retail? Is there anything you're going for in retail?
I think there are some things you can look at on a long-term basis, but, I mean, don't hold your hopes out for some kind of giant Christmas rebound, because heating oil prices are going to be very high this winter, even if oil keeps coming down. Natural gas remains fairly high. That's going to take a bite out of the consumer. And let's not forget this negative wealth effect of the housing market. It's very real, and you're seeing much weaker numbers in the weakest real estate markets for consumer spending than you are in other areas of the market, and housing is not going to have rocketed back 20% by Christmas time. So I think people's moods are still going to be down at Christmas. Long term, there is value out there in Costco's and some other companies, but don't be looking for some second half, rebound in retailers to save your bacon for the year.
I can't believe nobody tore each other's heads off here. A lot of different
That was a good discussion. Thank you, John.
I'll volunteer.
Thank you, everybody. Here's a look at what's still ahead today on Bull.
And now Paris Hilton is chiming in with her own energy plan in a mock political ad. All this is fun, but will it lead to any real solutions? Let's ask our Bulls and Bears panel. Bob, first to you. First of all, I don't know if you saw that, Paris Hilton. It's very good.
Yeah, it's actually, she's kind of more clever than I ever would have given her credit for. And Liz, by the way, you don't have to be from Jersey to insult the state. So
is that a rule? That's official?
Yeah, that's pretty much fine. I don't think the the tire gauge and the tune-up idea is any worse than some of the really knuckleheaded ideas that were tossed around back in the spring. Things like the suspension of the gas tax for the duration of the summer. It really isn't. The thing I'm finding fascinating about energy right now is that prices came down over a 3-week period for gasoline, but they came down by mere pennies. And yet last week, the highest consumption that we saw in 2008. So it doesn't take much to get people to change their behavior right back.
Peter?
Well, we don't even need an energy policy. You know, the problem isn't that oil is going up in price. It's the value of our money that's going down. And if Congress wants to do something about that, they can start cutting government programs. They can start with abolishing the Department of Energy. We don't need it at all. You know, we need the free market to set energy prices. You know, one of the reasons that so many people are driving SUVs is because Congress is still doling out huge tax subsidies for people who buy them. I know I bought an SUV specifically to get the tax
Gary,
break.
I know you've had a lot of problems with Peter in the past, but he makes some sense there, doesn't he?
Look, he's right. And it's such a mess by our government at this point in time with their policy. I do disagree on one end. We do need an energy policy. And I got to tell you, if I'm John McCain, I take that little Obama talk about inflating tires and put it on a spool and just play it 3,000 times a day and send it out to the U.S. because it is about as economically illiterate as I have ever seen. It does not help. And the fact that people keep saying, oh, if you drill, that's not going to help. When you always add supply, it always brings price down. That is economics 101.
We haven't added a drop, Gary, and the prices come down. So, Pat Dorsey, is the free market simply working without making major changes?
I think it's pretty tough to make a correlation, as David implied, between the president's announced lifting of the cap on drilling and the downturn we've seen in energy prices. The downturn in crude over the past few weeks
You're just wrong,
is simply... Thanks, David. I think you are, actually. But, we can talk about that. No, I mean, I think what it goes back to is something Peter mentioned earlier in the program, which is this unwinding of the giant short financials, long energy trade. I mean, supply-demand relationships simply haven't changed that much over the past few weeks. And the additional supply a few years out of continental drill oil is not great enough to account for the change we've seen. It's all financial unwinding of one big trade, no more and no less.
And just remember, the government pounded away at the speculators who are buying oil and pounded away at the speculators who were selling financials. So there was an absolute agenda
there. So
there,
you're
and that
complimenting
helped
politicians for pounding on speculators?
No, I'm saying they're helping manipulate the markets by going after people that are buying the wrong thing and selling the wrong thing.
Okay.
They want things changing.
Guess what? It's time to take a look at who made money today. We round out our show today with what you need to know. Bob O'Brien.
Tomorrow we're going to get a number of the fad stocks that are out there. We've got Crocs, we've got Jones Soda, we've got Hansen, the maker of the Monster Energy drink, and we've also got Deckers, the maker of UGG boots. Of that whole group, only Decker has managed to hold up and return some value. We're going to be able to see what separates a successful fad stock from the rest of them.
What do we need to know?
Well,
Peter?
following up on that theme, you know, we got Whole Foods came out with their earnings. They were down 30%. They slashed their dividend. This is continuing a trend that's going to accelerate in the months ahead. You know, the financials went down first. The next dominoes are the retailers, because if you can't borrow money, you can't spend it. You have no home equity. If you're paying this much for food and energy, you don't have a job. All these stocks are going to get killed. Even the good ones are going to stumble.
Gary, whole paycheck.
Pardon?
Whole paycheck. It's what they call Whole Foods.
But the tuna fish is terrific. That's what I can tell you.
What do we need to know?
Merrill Lynch, amazingly, they have diluted shareholders 87%, raised all this capital, and they're still paying the dividend. They haven't dropped it. They should, and I expect them to lower the dividend at least 50 to 75% in the next quarter. Let them save the money and use it for something important at this point in time.
All right. Pat, I might disagree with you on oil, but you're the best damn stock picker in the whole world. What do we need to know?
Well, I'll disagree with you on that, actually, also. Seriously, Cisco had great numbers last night. The margins expanded by about 2 percentage points, and the reason is simple, that the return on investment for buying their gear is so good that when IT budgets get cut, people are still spending with Cisco, and that stock has more to run, probably worth $31, $32 a share.
That's good to know. Do you agree, Bob?
Yeah, I think he's right on Cisco.
It's a value stock.
I don't know. I'm not buying the tech stocks.
He's not doing that rotation. All right, gentlemen, thank you so much for joining us here on Bulls and Bears.
And thank you for joining us on Bulls and Bears. We hope you make some time tomorrow to join us again. We'd love to see you.
It's time for Happy Hour right now. Your hosts, Rebecca Gomez and Cody Willard, are live next from the biggest party.